Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillahirabbil alamin. Assalatu wassalamu ala asyrofil anbiya'i wal mursalin wa ala alihi wa sahbihi ajmain. Praise and gratitude to the presence of Allah Subhanahu wa ta'ala who has overflowed His grace to all of us. Prayers and greetings to Prophet Muhammad sallallahu alaihi wasallam, the messenger of Allah. I would like to greet the Honorable Mr. Tirta Segara, Member of Board of Commissioner, Indonesian Financial Service Authority, Excellency Dr. Bello Lawal Danbata, Secretary General of the Islamic Financial Service Board, Excellency Mrs. Filianingsi Hendarta, Bank Indonesia Head of Payment System Policy Department, Excellency Mr. Iman Shah, Deputy Commissioner of Indonesian Financial Service Authority, the honorable speakers, the Islamic Financial Service Board members, distinguished guests, and VIPs. To ensure the safety and convenience of all participants, ISEF 2021 committee continues to follow all government guidelines of health protocol. Ladies and gentlemen, good afternoon. My name is Nadira Titalia, and it is my honor to welcome all of you to the IFSB conference with the topic of financial stability in the digital era and its implication of Islamic economics and finance. Digital transformation has been rising in the midst of COVID-19 pandemic alongside digitalization trend. Some central banks have conducted assessment of policy and initiatives, in particular to maintain the financial system stability, economic transactions, and the impact to the real sector, including to the Islamic finance. This conference will give us insights from policymakers, experts, and Sharia scholars on the issue and the ideas of digital transformation policies, market practices, and Sharia initiatives. Representatives from central banks, international standard-setting bodies, industry players, and Sharia scholars are among the speakers in today's conference. We have two exciting sessions ahead of us. The first session, we will talk about the central bank digital transformation, policy responses, and financial system stability. Then, in the second session, we will talk about financial market and industry views, assessment, and Sharia thoughts on digital transformation. Before we begin, we shall hear the recitation of Holy Quran by Ustadz Henrianto. Ustadz Henrianto, the time is yours.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم والله جعل لكم الأرض بساطا لتسلكوا منها سبلا فجاجا قال نوح رب إنهم عصوني واتبعوا من لم يزده ماله وولده ومكروا مكرا كبارا صدق الله العظيم.
Thank you, Ustadz Henrianto, for such a beautiful recitation of the Holy Quran. And now we would like to welcome Dr. Bello Lawal Danbata, Secretary General of the Islamic Financial Service Board, to deliver the opening remarks. Dr. Danbata, the time is yours.
Bismillahir Rahmanir Rahim. Wassalatu wassalamu ala Sayyidina Muhammadin wa ala alihi wa sahbihi wa sallim. Honorable Tirta Sagra, Member of the Board of Commissioners of Indonesia Financial Services Authority, distinguished speakers, delegates, ladies and gentlemen, Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. It is indeed my great pleasure to welcome you, all of you, to today's IFSB conference in collaboration with Bank Indonesia, titled Financial Stability in the Digital Era and its Implication for Islamic Economics and Finance. It is indeed an honor to witness the presence of eminent subject matter experts, comprising supervisors, regulators, Sharia scholars, and practitioners from around the world to discuss and share their ideas that will pave ways for the development of the Islamic financial services industry, particularly in the digital era, while ensuring its financial system stability and Sharia compliance. The global Islamic financial service industry, as we all witnessed in the IFSB Stability Report, has maintained its growth momentum in 2020 despite the global pandemic, and it is approximately valued at 2.7 trillion US dollars, demonstrating a year-on-year growth of 10.7% in total assets. This positive trend has also been seen in Islamic banking data, as at Q3 of 2020, where deposits for the Islamic banking sector grew by 11.9% year-on-year growth, and their financing grew by 12.8% and assets by 4.3%. Regionally, the GCC retained its position as the largest domicile Islamic finance jurisdiction, and the countries such as Turkey, European countries, and the CIS region has been classified as others, as they have also registered a growth of 16.4% year-on-year growth, with a total assets worth 61.8 billion and accounted for 3.4% of the global Islamic banking assets. It is indeed gladdening to observe that the rapid growth of the Islamic financial service industry is not only confined in the Muslim majority countries, but also spread out to other emerging and advanced economies that are offering an assorted variety of products and services. The many challenges that come along with this progress need to be addressed carefully and prudently for the growth to be resilient, sustainable, and inclusive. This will include the development of a robust digital transformation, regulatory and supervisory framework for every sector of the financial system. Ladies and gentlemen, the progress of digital transformation has accelerated, particularly in the midst of pandemic, whereby many jurisdictions employed mobility restrictions to some various degrees. The extensive use of technology required regulators and supervisors to come up with some adjustment necessary on their policy framework in order to ensure sound and robust financial system, and to be able to accommodate and effectively regulate the key aspect of digitalization. Of course, some central banks have responded this digital trend by assessing the benefit and challenges of the digital transformation in their respective jurisdictions by coming up with policies and initiatives specifically to maintain the financial system stability. Economic transactions, as well as increased policy impact, has been a focus point for many regulators. Various digital-based financial services have also been offered in a number of jurisdictions in order to ease the customers' demand and fulfillment of their needs when it comes to the financial services in terms of timeliness and as well as efficiency. It allows the expansion of financial access and in order to also increase financial transparency. Considering its advantages, digital transformation are expected to continue rising, and its implication on Sharia compliance and risk management approaches that need to be carefully looked into has been the main concern and the trend for many regulators as well as the marketplace. Therefore, today's agenda is designed to entice respective regulators and market players to share and discuss the regulatory and supervisory issues related to digital transformation. I'm confident that the eminent speakers will discuss the various perspectives of digital transformation in great details in their respective sessions. This conference is expected to build at least a number of things. First, a comprehensive understanding on digital transformation from regulators' perspectives. Mainly, it is financial and economic impacts, policy responses, and strategies. Secondly, the discussions from the market on some applications of digital transformation in financial transactions is also expected to be discussed in today's conference. And lastly, understanding of the Sharia views and thoughts on digital initiatives in the payment system, financial market transactions, banking system, and many other aspects of the global Islamic financial service industry is also expected to be one of the objectives of today's conference. In the first session, we have experts like Mr. Firaz Al-Lawati, Mrs. Benedict, and Mrs. Flanigish Hendetra to share their thoughts and perspective on central bank digital transformation, particularly regarding policy responses and financial system stability initiatives. How the regulators and the international standard setting body maintain the stability of economic and financial stability in this digital era is also expected to be shared during this session. In the second session, we have the Acting Director General of the ISDB Institute, Dr. Sami Swelem, Mr. Lilian, Dr. Mohamed Demak of S&P 500, and Dr. Bashir Ali Umar, a scholar for the in Africa region, particularly the Central Bank of Nigeria, to discuss the Islamic financial services industry and Sharia's perspective on digital transformation that has taken place within the business and economic transactions worldwide. We might know the initiative and responses of the industry regarding the issues, including the recent digital-based products and services to better serve the needs of the customers during this session. Distinguished delegates, ladies and gentlemen, the IFSB has noted the importance of digitalization in Islamic finance. At least there are three transformations that we feel that should take place at this fourth industrial revolution, namely business model transformations, human resource transformation, and technology transformation. The business model transformation from our own perspective will include changes in the business models, particularly the application of the philosophy of the Islamic finance, how it is being operated, technical mechanisms and supervisions, as well as monitoring that is comprehensive in order to assess the risks and mitigate these potential risks that may be resulting as a result of digital transformation. This also will include the transformation in product and services by the Islamic financial service industry, particularly the market players such as the e-deposit, the Sukuk, the InsurTech, securities, and other commodity initiatives, including the crowdfunding, etc., which are offered via business innovation system in the integrated markets that we have today. Alongside the business transformation, definitely is the human resource transformation, capturing all levels of staff from both regulators as well as market players, management, as well as the Sharia scholars, supervisors, and all those stakeholders that are involved in the current global Islamic financial service industry. These need to be transformed in terms of knowledge, experience, and ability, as well as capacity to adapt, support, and cooperate with the new business challenges. Special training and education or monitoring are suggested to speed up the human transformation, in addition to the equipping and education of younger generation with the most updated and relevant formal education, such as digital transformation and finance at universities, digital payment system, virtual markets, as well as other relevant qualifications that are needed for the future development of the industry. Last but not the least, technology transformation is one of the key areas that will drive the development of this era. It requires the transformation of existing non-digital and manual system into a digital one, such as the new IT support systems, cross-border digital payment systems, including digital financial infrastructures, that involve clearance, funds transfer, settlement, custodianship of assets, and financial technology are the necessary transformation that I needed. We have to acknowledge the transformation has come to stay in terms of accelerated digitalization, and we have to ensure that sufficient regulatory framework is put in place in order to mitigate any potential risks and vulnerabilities that may be arising from this transformation. Distinguished delegates, ladies and gentlemen, today's conference is taking place at a time when we are passing through yet another economic and financial crisis induced by COVID-19 pandemic. Regulators and supervisors around the globe have stepped up with various policy measures that in order to mitigate the impact of the crisis, which are well recognized and well commended by the IFSB. And in fact, one of the most fundamental challenge that we witness is in accelerated digital transformation today is the way that we structure the way we do things. We are now having a conference. Last in 2019, I remember we were at the Jakarta Convention Center where we have the IFSB Summit and together with the ISEF. But this is indeed a very remarkable development that we are now be able to adjust to the new normal and ensure that all KPIs and things that we need to do are not affected due to the lockdowns and the new normal. I would like to also take this opportunity to share the upcoming agenda of the IFSB that is related to our events that will be taking place Bismillah ta'ala in Jeddah on the 9th to 11th of November in Saudi Arabia that is the IFSB summit that will be hosted by the Saudi Central Bank. I will take this opportunity to invite all IFSB members and non-members to take part in this prestigious event in which prominent speakers, head of authorities like governors of central banks, chairmen of financial services authorities and securities commissions are coming, and they will be sharing their experiences, thoughts, and suggestions for the moving forward of the global Islamic financial service industry in the digital era. It is indeed a great pleasure and honor to have this partnership with Bank Indonesia that has been a greater support and one of the founding members of the IFSB. We sincerely appreciated the commitment by the team that put in place this conference on behalf of the IFSB and Bank Indonesia. We thank the Secretariat of ISEF. And on that note, I conclude by wishing you a productive discussions, and we look forward to the constructive outcome of this engagement. Thank you very much. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Thank you.
Thank you, Dr. Danbata, for such a remarkable message. And now, ladies and gentlemen, please welcome me in welcoming Mr. Tirta Segara, Member of Board of Commissioner, Indonesian Financial Service Authority, to deliver his keynote speech. Mr. Tirta, the time is yours.
Thank you. Your Excellencies, Secretary General of Islamic Financial Services Board, IFSB, Dr. Bello Danbata, our distinguished panelists, speakers, and moderators, notable representatives of OJK, government agencies, and financial services industry, esteemed officials of IFSB, and ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. A very good afternoon to all of us. It's a great honor for me to receive this opportunity to deliver a short speech on financial stability in digital era and its implications to Islamic economic and finance. In this opportunity, allow me to express my greatest appreciations to the Secretary General and ISB, Dr. Bello Danbata, for your continued support to OJK and your leadership in the Islamic financial industry. Honorable guests, ladies and gentlemen, Studies have shown that Islamic financial institutions have demonstrated significant resilience during financial crisis due to essential pillars of Islamic finance. Firstly, Islamic financial transactions must be accompanied by an underlying productive economic activity. And secondly, given that Islamic finance is based on profit sharing, the Islamic financial institutions involved must undertake appropriate due diligence on the viability of all the business proposals. In order to better serve the greater public, Islamic finance must always meet the expectation of business and consumers, including during the global pandemic, which has affected multiple aspects of the global economy, with no exception to the Islamic finance industry. The many restrictions, such as physical distancing and limited social interactions, has pushed us to think of more innovative ways to better serve our consumers. Against this background, we are now aware that the digital innovation is unavoidable. The question is whether every element in the Islamic finance is now ready. Are the industry players ready with the new product, digitalization product? Do consumers have full digital and financial literacy of the product, and so forth? I may report to you that in Indonesia, as of January 2021, about 74% of populations are actively using internet, while 345 million people, a mobile phone is registered. It's active mobile phone. These figures offer us the opportunity to shift from conventional financial products to digital financial products. And as of July 2021, total Islamic finance assets in Indonesia have reached 1.9 trillion rupiah, or approximately about 132.7 billion US dollars. After experiencing slowdown last year due to pandemic effect and uncertain global conditions, the Islamic finance industry in 2021 also recorded encouraging growth, with 17.3% year-on-year assets growth in July 2021. The market share of Islamic finance reached 10.11% of total financial industry in Indonesia. Considering Indonesia have large Muslim population and increasing government support to develop Islamic finance industry is expected to grow continuously in the following years and also adopt digitalization, of course. However, the development of digital technologies also brought some consequences or new challenges. As a board member of the Indonesian Financial Services Authority overseeing consumer protection, we increasingly receive complaints with regard to scams or frauds related to digital financial products. Looks very simple, such as PIN or PIN number theft or one-time password theft. Looks very simple, but it happens. We see the simple issues as the consequence from a low digital literacy. Honorable guests, ladies and gentlemen, against the above background, I believe that one of the most pressing issues of growing digital financial innovation is an effort to increase digital and financial literacy. Based on OJK's survey, national survey held in 2019, although the nationwide general financial literacy level has reached 38%, the figures for Islamic financial literacy is much lower, only reaching about 9%. Higher literacy is required in consumers in order to protect themselves from mis-selling activities, fraud, such as phishing schemes, unauthorized use of data, and behavioral issues, such as excessive borrowing or financing and over-financing among certain consumers. In short, although we have seen an accelerated growth in digital financial innovation, we are aware that consumers may not be fully ready to adopt with these digital products. That is from the consumer side. And how about the regulators? As a regulator, in overall, we support and welcome the digitalization in the financial service industry, including for the Islamic finance. Indeed, we recently issued OJK regulation, which includes specific provisions on the establishment of digital banks. Yesterday, even on the 27th of October, we also introduced a blueprint for technical guidelines on digital banking. We encourage the industry to adopt and introduce the digital products to better serve the consumers due to its convenience, practicality, affordability, and also a wider reach out. Furthermore, OJK has placed educational program for Islamic financial literacy as a top priority. During the pandemic, compared to 2019, we have increased Islamic education, financial Islamic education programs by 300%. We also developed a learning management system and provide financial literacy materials through an educational website, mobile apps, as well as through social media platform. However, promoting Islamic finance and achieving financial stability cannot be done by OJK alone. We must work closely, hand in hand, with other institutions, such as the Central Bank, Bank Indonesia, the Sharia National Council, which oversees fatwas of Islamic financial products in Indonesia, and also with the industry players. The role of national Sharia councils here is very pivotal and very challenging for producing fatwa in products digitalization and safeguarding the compliance with the Sharia principles. We must realign our vision's synergy not only to promote Islamic financial literacy, but also digital literacy. Collaborations need to be scaled up, and synergy needs to be built with all the stakeholders. As we all witnessed, this seminar has become a valuable forum for exchange views, share their experience on Islamic digital innovation. From the regulator's point of view, we support and promote, and we support adoption of the digitalization in financial industry with the balancing between innovation and industrial growth. We should also protect the consumer's interests, and that's why we continue to increase the consumer financial literacy and also digital literacy. Before I conclude my remarks, I would like to highlight that in this webinar, we have the honor of listening and discussing with the prominent speakers and industry figures. I would like to encourage everyone in this session to ask questions, exchange views, and share your concerns regarding the Islamic finance industry. With this, let me conclude my remarks and wish the event a great success. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Thank you.
Thank you, Mr. Tirta Segara, for such an inspiring speech. Before we begin, we would like to invite again Dr. Bello, Mr. Tirta, Mrs. Filianingsi Hendarta, and all speakers and moderator to get ready and join me in the photo session. On the count of three, if you please, okay, Bapak Bashir, if you could turn on your camera, please. All right. Okay, on the count of three, 3, 2, 1. Once again, if you may, 3, 2, 1. Thank you very much. Ladies and gentlemen, unfortunately, Mr. Tirta has another conflicting agenda and has to leave this virtual conference early. Mr. Tirta, thank you for donating your time with us today. And now we will begin our first session. Thank you, Bapak. First session with the topic of central bank digital transformation, policy responses, and financial system stability. Allow me to welcome our moderator, Mr. Suhail Isa Al-Jali, Assistant Secretary General of the IFSB. Mr. Suhail, the time is yours.
السلام عليكم بسم الله الرحمن الرحيم والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. Dear Excellencies and our participants and colleagues, thank you very much for joining for today's session, which will be the first session for today. It's my great pleasure to see you, to see many participants from different jurisdictions. On behalf of IFSB, we would like to express our sincere thanks to BA and to give us this opportunity to be here again and share with you our thoughts and the session for today. As you are knowing that today we will be going to talk about the innovation and practitioner in the online session for IFSB Conference 2021. Financial stability in the digital era and its implementations for Islamic economies and finance. In the first session, we will be focusing on central bank digital transformation, policy responses, and financial system stability, which will aim on ways forecast innovation technology, adopting the new technology payment system, and that the sensitivity of Islamic finance system and growth and development of policies from the rapid digital transformation. I am delegated to have the honor to introduce our panelists for today's first session. Our Ms. Filianingsi, Assistant Governor, Head of Payment System Policy in Indonesia Bank, Mr. Firas Al-Lawati, Head of FinTech Committee in Central Bank of Oman, and Ms. Benedict Nilsson, BIS Head of Innovation Unit, BIS Hong Kong. To start our first session, I would like to introduce our first panelist of today, of the session, Ms. Fili. Currently served as Assistant Governor, Head of Payment System Policy, Bank Indonesia. She received her MBA degree from Boston University, US in 1992. She has had a career at Bank Indonesia for more than 34 years and led several strategic departments in the area of monetary, banking, financial system surveillance, payment system, and that internal management. It is a unique opportunity to have her here today among our panelists, especially because she is leading transformation of payment system industry in the digital era through the Indonesia Payment System Blueprint 2025. With this brief introduction, I would like to ask Ms. Fili to share her substantial experience with us. Ms. Fili, the floor is yours, please.
Thank you, Pak Suhail. Honorable Dr. Bello dan Beta, Secretary General of IFSB, and also Pak Tirta Segara, a member of Board of Commissioner Indonesia Financial Services Authority, and distinguished speaker, Ms. Benedict Nolan, Head of BIS Innovation Hub, Hong Kong Center, and also Mr. Firas Al-Lawati, FinTech Committee Chairperson, Central Bank of Oman, and of course our moderator, Mr. Suhail, Assistant General, Secretary General IFSB, ladies and gentlemen, all participants of this IFSB conference. Assalamualaikum warahmatullahi wabarakatuh. Very good afternoon, and thank you for the committee for the opportunity giving to Bank Indonesia so we can share in this IFSB conference regarding the central bank digital transformation, the policy response that we have taken, and also the financial system stability. Let me share some slide here. If we are talking about the payment system, so David Humphrey said that developing a payment system in any country is an interesting interdisciplinary effort that requiring the skill of some expert, the economists, lawyer, engineers, and also politicians. And I bet if each of us here could be classified into one of it. So at least if we are not a lawyer, economist, or engineer, so we can be a politician in any area. So today I will share with you the following outline. Can we move the slide, please? Yeah, this is just we can see the development of the payment system. So can we go to the outline? First, I will talk about where are we now, and then secondly, we can talk where will we go, and the third is the lesson learned that we can have so far. So if we talk about the pandemic right now, the COVID-19 pandemic. So next slide, please. The slide 4. Yeah. If you are talking about the COVID-19 pandemic, we all sure that it's a turning point for all of us to reflect, to reimagine, and also to rearrange the world in the future. The pandemic itself, we know it presents not only a challenge, but it also has the extraordinary impact, not only for health, but also fiscal stimulus, monetary stimulus, and also the financial sector around the world. And it is pushing the central bank to formulate policy responses, even though in the very difficult situation. And the crisis due to the pandemic is a test for the central bank in implementing the integrated, what we call the integrated policy framework. So we cannot do the response it's only in the one policy, but we have to integrate a policy framework here. So in principle, the central bank respond in the 3 approaches here, namely first, loosen the monetary policy, and second, more macroprudential policy that promote the growth, and the third is to increase the liquidity in the financial market. And if we see in terms of the monetary policy here, most of the central bank, both in the advanced economic or in emerging market, took an accommodative approach, lowering the benchmark of the interest or the policy rate, and then do the quantitative easing through the purchase both the sovereign or corporate bond, whether in the primary or in the secondary market. And in the term of macroprudential policy, are directed at promoting the economic growth. So several policies were taken, among others, encouraging the rescheduling of the credit or delaying the credit payment, as well as the government also participating in the financial bank credit with the aim of increasing the lending to the real sector. And if we go to the payment system area, policy are directed to promote the economic growth either. So some payment system policy are aimed at the transaction to lower the transaction cost, to make the transaction cost more efficient, and also do the digitalization of the payment system. So we are in Bank Indonesia also do the same thing. So we establish and start to implement the blueprint of the Indonesian payment system 2025. Later on, I will elaborate further. So the complexity of a two-day global challenge is increasingly difficult to solve individually. So collaboration is needed to solve the problem that could previously to be solved individually. Productive collaboration must be based on the shared goal, symmetrical structure, high-level negotiation, and also interaction and independence, which are expected to create an idea and also innovation to become a catalyst or further development. So if we see the global development, the accelerated digitalization. In the next slide, we can see diminishing globalization and rising digitalization. This is create a new challenge and also opportunity for the central bank. So digital transformation has formed a new market infrastructure. We can see here the characteristics of the digital economic that is based on the data network, the activity loop means that the economics of scale still play an important role. But this condition form the digital economy market structure in the form of a barbell. We see the barbell, which consists of one side is the several big player, big tech, and also the incumbent as the market leader. But on the other side, we see many small players who are specialists, the fintech, and they have a niche markets on it. And if we see another chart, we can see the pandemic also encouraged the shifting people behavior toward digital through the e-commerce. So this then the result in the faster digital transformation due to the compulsion, and the combination of the digital transformation together with the condition of the COVID has caused a radical change in the pattern of human life. And a study from the Twilo even stated that the COVID-19 has accelerated digital transformation by 5.3 years. So we can see that the people has changed the behavior. Usually they're not buying things through the e-commerce. They just go to the market and do the offline transaction. But now they are get used to with the online transaction. And another thing is the taxonomy of money. So we can see that the develop in a digital era has an implication on the implementation of the central bank mandate in monetary policy, macroprudential, and also the payment system. And we can see here the development of digital currency based on DLT raises a number of potential policy implication also. And the particularly on the central bank role in the payment system. So all the central bank, and this is the global trend, try to do the deep assessment on the central bank digital currency. So the these various phenomena are a moment for a reflection on how the central bank must transform in digital era. So we have to do this to remain credible. So the central bank must change thoroughly, both in the area, not only in the policy mix, but also institutional transformation and also human resources. And all of this hopefully can transform and maintain the role of the central bank and create the central bank 4.0. And next slide, we can see how about the Indonesian. I just share a little bit about the digital payment happen in Indonesia. The payment behavior activity, especially on digital based retail payment channel and instrument, have shown a significant growth here, including their acceptance, especially through the CRIS. This is the QR Indonesian standard. CRIS channel and also digital payment bank, and the third one is the electronic money instrument. And if we see the data on the CRIS as a payment channel, the past year grew by 248% year on year, and the acceptance reflected by the merchant has reached 11.7 million by October, from our target of 12 million merchant by end of this year. And if we see the digital payment channel through the banking also grew 60%, and this is show that the digital transformation in banking continue, and the dominance of digital payment banking mainly come from the innovation of the mobile app. So the conventional bank try to enhance their services by building a super app, and also to fulfill the customer need and adopt the customer centric here. So meanwhile, we also can see the growth of the conventional payment activity through the national clearing system, and also the RTGS and card-based payment was relatively stable. So talking about digital economic trend, we are expected to remain positive until the end of 2021. So why we are so optimistic about that? Because of at least 3 reasons. First, we can see the increasing public preference and acceptance. And second, the e-commerce performance and innovation. And the third, the payment services that continue to expand, not only for banks or by banks, but also by the fintech. So the e-commerce transaction estimated in Indonesia to increase by 48%, supported by the continued shifting of customer behavior toward digital, and also the efficient use of digital payment and various marketplace innovation. And also the electronic money continue to grow by 35%, and also driven by the expansion of the e-commerce, the ride-hailing, logistic, and also digital payment ecosystem. And lastly, the digital banking also encouraged an increase projected to grow by 30% year on year until end of this year. So as a response to the digitalization, responding to the rapid flow of digitalization, the bank, not only the fintech, the bank, next slide, also continue to carry out transformation, not only on the product, but also on the aspect of the core banking and cloud usage, and also business processes. And we see in general the banking strategy in digitalization is divided into three models. First is a digital transformation of the existing bank, where digitalization is carried out end-to-end, starting from the opening of the saving account using the API and developing the chatbot and creating the super app to improve the customer experience. And the second strategy is to establish a special unit for the digital bank. This strategy is generally carried out by the medium-sized bank that are rebranding their digital banking product and services. And the third strategy is the formation of the new digital bank through the corporate action. So this step is carried out by the small bank, either by the fintech or the big tech, or even the incumbent actor such as the big bank. They try to buy the bank, the small bank, and convert it into the digital bank. So this is easier than transforming the old core banking system and changes the mindset and culture of the existing bank. And next, we see that how the bank, because right now in the retail transaction, in the retail industry, we can see there is another new player we call the fintech, who also have a big share in the retail market. And how can we do the interlink? So we try to interlink the bank and the fintech, and it is happened. So in today's digital era, in the next slide, we can see that since the boundary between industry is getting blurry, and right now the trend of collaboration between bank and the fintech are getting stronger. So in this context, bank and the fintech require cooperation, which is the collaboration and the competition mindset to improve the quality of its services. So the partnership is because both parties with their competitive advantage can bring the essential asset to the deal. So the fintech, which is the tech-driven, applying the innovative concept, they can create a large number of ideas and in a very flexible way. But the other hand, the bank usually risk-averse, and also, but they can allow them to open account, hold money, and then give the credit with the cheaper or lower rate, and also the bank here, they have a better risk management and can give the fintech access to their customer. So we believe that the fintech and the bank partnership can create an ecosystem that enable them to satisfy and to fill the gap between the services given by traditional bank and also fulfill the real customer need. So the second topic is, so considering all development recently, where will we go? And in Indonesia, facing this condition, we know that we need the comprehensive and integrated payment system policy framework. It's needed to balance between optimizing the innovation opportunity given by the digitalization, and also the other side mitigating the risk. And that's why we, as a policy response, Bank Indonesia issued the Indonesian Payment System Blueprint 2025, which is fully oriented toward the effort to build a sound ecosystem as a guide for the economic development and digital finance in Indonesia. So we can see we have the 5 vision here: integration of digital, financial, economic, and encouraging financial inclusion. Second is supporting digitalization of bank as a main institution, because we know Indonesia is still bank-led. Almost 85% of the financial market share is on the bank. And the third, ensuring the interlink between the fintech and the bank to avoid the shadow banking risk. And the fourth is ensuring a balance between the innovation and the risk. And the fifth, of course, we are guaranteeing the national interest in digital, economic, and finance between countries. So with the 5 vision, we have the 5 initiative here: the open API standard, the retail payment, the wholesale, and also the data, and also the regulatory reform. And we also will implement it into 23 deliverables, and we will deliver it stages until 2025. Of course, some of it we can do it by ourselves, but mostly we will have a coordination with the industry and also with other authority, with the OJK, and also with other related ministry. And this is just want to share. This is the blueprint, and then this is the key milestone in 2021. We have regulatory reform. We just issued, the next slide please. We just issued the form BI regulation here as a regulatory reform. And then the second, in second week of December, hopefully we will implement the fast payment of Bank Indonesia. And then the third is the payment system standard. We just issue the regulation of the standardization in the payment system, and also the standard open API for the payment system. And also QRIS, the CRIS, with a lot of feature, not only later on, not only for the transfer, but also for the deposit, withdrawal. And we also right now have the piloting the cross-border CRIS with the Bank of Thailand, and next with the Bank Negara Malaysia, and also other countries. And this is, next slide, this is the fast payment. Just want to give you a very brief. This is the feature of the fast payment, 24/7 real time in the bank level, also in the customer level. And next is the open API. So we standardize the technical, security, business, and governance. Why? Because we want to encourage the equal, next slide please, encourage the equal disclosure of data and information between bank and the fintech. So it will create the, maintain the level playing field between a bank and fintech, to prevent the monopoly risk and widen the opportunity for inclusiveness, to open the wider granular data. And next slide about QR, Indonesian standard. I just want to show you the development, the progress. Previously, we only we have a lot of QR payment, but right now we have only one Indonesian standard for the QR. And next is the cross-border. This is just give you the idea about the cross-border payment in Indonesia. So jump to the lesson learned. What can we learn? We can learn 3 things here. Next, please. Lesson learned. First, regulatory reform become essential as a legal basis, a legal foundation, as well as the basis of restructuring the payment system industry in the digital era. Second, increasingly blurred industrial barrier require an integrated inter-authority policy approach. We cannot do by ourselves. We have to hand in hand with another authority. And the third, implementation of Indonesian payment system, a blueprint 2025, absolutely requires support, readiness, and also active role of the industry. As said that no one can whistle a symphony. It takes an orchestra to play it. So, ladies and gentlemen, if you are interested for further explanation regarding the blueprint, you can do the scan of the blueprint Indonesian payment system. Thank you. Go back to Suhail.
Thank you very much. Thank you very much, Ms. Fellini, for your presentation and for your session, and which was really very detailed and informative. I hope everyone will get benefit, and even the regulators will be getting an experience of how Bank Indonesia is going forward with this digitalization and the new era. Thanks again. Now, I think without, we have very limited time, so now I will start like introducing our second panelist of the day, Mr. Faraz Al-Lawati, Head of FinTech Committee and Assistant Manager of IT Department at Central Bank of Oman. He has been working at Central Bank of Oman since 2007. But with this experience, he had like very like challenging and like great experiences in different type of industry. He's holding a master degree in accounting and business information technology from University of New South Wales. He's managing he is managing a number of projects and initiatives in different business and information technology areas. In addition, he has participated in a number of local and global conferences and seminars. With this brief that introduction, allow me to ask Mr. Faraz to share his experience and the Central Bank of Oman's experience with regard to this digitalization and going forward of it. Mr. Faraz, the floor is yours, please.
Thank you, Brother Suhail. We are missing you here at the Central Bank of Oman. I wish you all the success, inshallah, at the IFSB.
Thank you.
So are we going to have my slides on screen? I have just few slides. I don't have much, to be very honest. Just a quick overview. So distinguished guests, ladies and gentlemen, sorry, not this one. Okay, I think I may start until these slides come into the screen, not an issue. So yeah, distinguished guests, ladies and gentlemen, very good morning or afternoon or evening, depends on your time zone. Assalamu alaikum wa rahmatullahi wa barakatuh. I hope everybody is staying safe and well, inshallah, with everything that's happening around us. It's a great, it's indeed a great honor and privilege to be among all of you today virtually. I would like really to take the opportunity to offer my appreciation and gratitude to IFSB for the kind invitation and allowing us to share some quick overview of what we are doing in the space of financial technology and digitization. Today's on the first session, and to be part of and among key expertise from different parts. If you just go to the next slide. So there is no doubt that the financial sector is a powerful engine behind the economic growth and the overall economic landscape in Oman. It has been, the previous slide. It has been always improving, over the years as a result of multiple progressive governmental plans, policies, projects, regulations, and so on. So we have all witnessed that innovation and the new digital era and the technologies around us has shaped the evolution of multiple sectors, including the financial and banking systems, and it has played a big role and a key role in today's economy. And we can see that also it is contributing to the digital economy of many countries in terms of calculating it and considering it. So the evolution of digitization in terms of banking, financial, and also within the financial technologies, the new entrants and the new entrants over the past couple of years has led to a number of new opportunities, either at the front end or the middle or the back offices as well. As well, it has opened a number of new risks in the global banking and the financial sector, and also the regional and at a local level. So the need of digitization and innovation technologies has been always, it's been always now a key pillar and agenda of any strategy. With the majority of the existing banks, the financial institutions, regulators, government agencies, even before the pandemic. Yes, the pandemic has put more pressure and it's opened a number of opportunities for people to really think about having the digital transformation part of their agenda and part of their strategies across all sectors, including the financial and banking sector. For the existing players, for the new players, for the regulators, for the supporting stakeholders, cross-border collaborations, and so on. As the technology has developed and keep developing, there has been, sort of a raise in customer expectations, in customer demands. There is a more pressure to adopt these emerging technology, higher competition within the sector, in the world, and also in the region. So again, looking into the current and the previous situation of the pandemic has created lots of opportunities. And I would say with all the I would say the side effects of this pandemic, but this pandemic started to drive the transformation in many banks, in many regulators, in many government bodies, having a new players in the market. It also have changed the market and the consumer and people behaviors, trust, expectations on the digital channels, which definitely drives toward more of having people to be part of the financial and the banking systems, which will definitely enhance and improve the financial inclusions. So despite it has been an incredible transformation of many banks and financial institutions, and they have moved nearly all their transactions or majority of their transactions to be available digitally, we still that fintechs, the financial technology firms, the new entrants, have shown what is possible, and that all banks would really need a digital plans. Otherwise, they will end up with staying with the legacy systems and platforms. So the impressive development of financial technologies, services, and also the emerging companies have led to, I can summarize them into four areas. The first, it has improved the productivity, the customer engagement, and efficiency in the financial services that is offered to the customers. It started to support to have more innovative financial and banking solutions that simulate what the banking sector are offering, but with the flavor, of course, of creativity and innovation. It has also simplified, the collaboration that happened between the banks and the fintechs have simplified the banking and financial operations. But of course, with all these beautiful things, it has also introduced a number of new threats. Maybe they are not new risks, but they are in a new shape. They are in the new shapes, which requires, I would say, intensive precautionary measures to achieve the safety, integrity, and stability of the financial sector. However, regulators and policymakers should always, next slide please, balance between the supporting innovation and the financial stability to maintain, the healthy, resilience banking and financial systems without, of course, putting a burdens on the innovation. This is just a quick introduction. Now, let me just shed light, if you go to the next slide, please. Let's shed light on CBO and the Central Bank of Oman plans in the space of financial technology, the digitalization, and the financial innovation. I'll talk briefly about some of our, about our vision, objectives, what are we doing, what are the initiatives. So in Oman, the Sultanate of Oman is undergoing its own economic development and diversification strategy in the view of Oman Vision 2040. The said vision shed light on the digital transformation, revolution, to support the growth and development of different sectors, and including, of course, the financial and banking sector, in order to maintain resilience, sound, transparent, and smooth functioning of the banking and the financial sector. At the central bank, we are keen to foster the development of digitizing the banking, the existing banking and financial players, and also the new players, the financial technology players, through a number of initiatives within our mandate to develop a fintech industry. So we are looking at all possible opportunities to embrace the latest technology that would improve the operations, enhance efficiency, increase the productivity, and also to bring the innovations in the economy. So a part of the central bank vision and objectives in terms of continuous support to the growth and uptake of the fintech and support the digital transformation journey on the sector, we have done a number of initiatives, and these initiatives are driven by the Central Bank of Oman for the sector. So we set our vision for the financial technology is to have a dynamic digital financial ecosystem that fosters financial development, thus providing, or producing sustainable support, diversification, competitiveness in the economic sector through innovation. If we go just to the next slide, please. So we have an objective to promote and establish the establishment as well as the development of the fintech sector and the Sultanate. So we have different priorities. We have we have prioritized our plans for the development and the enhancement of the innovations, especially given there is a rapid stride the sector has been making globally and regionally. So we need to have a continuous contribution to the financial sector towards achieving more financial inclusion and more contribution to the economy. Our objective is establishing a comprehensive and nurturing fintech ecosystem in Oman that will support to have more fintech startups, more SMEs, more technology transformation at the banks, technology firms, to develop, services based on innovation, which we believe that it will contribute to the country economic growth, help to create jobs directly or indirectly, new opportunities, and also will attract some investment to the country, whether it is venture capitals, angel investment, and so on. So if you go to the next slide, please. So our objective, as per our fintech framework and roadmap that we have drafted, we're focusing on 8 main objectives. Contribution, how we can contribute through our initiatives to the economy of the country, GDP, creating new jobs, either directly or indirectly through our different initiatives, supporting the financial inclusion, the financial integrity, capitalizing and supporting the local talents to make sure that we retain these local talents and we attract more talents which we believe it is also important. Promote and support the society with less cash, with different initiatives, either within the financial technology, payments, and so on, and of course, attracting the investments. So if you just go to the next slide. So, number of initiatives that we have worked as a Central Bank of Oman in this space. As I told you, one of them is we have published our fintech framework and roadmap, which is basically a holistic plan. We called it the Oman Fintech Ecosystem. So it has the vision, objective, and the enablement that's supported by a number of key competitive advantages, such as the healthy and resilient banking sector, the political stability, the robust payment platform and infrastructure, and a higher percentage or ratio of the youth in Oman population. We're talking about almost 49% of the Omanis population are youth, and also the higher percentage of mobile penetration, internet penetration in the country. That's all of them are considered one of the key advantages or competitive advantages for us to meet our objectives. And also in the area of payments, platforms, infrastructures, Central Bank of Oman have issued or initiated several of initiatives to build and expand the payment systems industry, starting from the day where we have the National Payment System Strategy, and then publishing the National Payment System Law, the secondary regulation, and implementing a number of state-of-the-art of national payment systems, licensing non-bank entities to provide payment service provider services, bringing innovations in the payment instruments channels, enabling money transfer, which is already available in the country through mobile numbers as an identifier, or paying using QR codes and many other different payment services. So the Oman Fintech ecosystem is comprised of 4 beams and 7 pillars, and these beams are focusing mainly on policies, infrastructure, talent, and the creation of demand. And we believe that the growth that is happening in this space are primarily driven by four interrelated beams that I have highlighted, and a number of pillars. And of course, the most important thing is the collaborations between the different stakeholders. So our Oman fintech ecosystem is focusing on the adoption of dynamic law and regulation, the development and engagement of national innovative talents and skills. Our focus is on the ability of attracting new talents, capitalizing on the existing talents, and retaining the talents. And also, we are very much focusing on the support of collaboration between the education and academia and the industry, the financial sector and the fintech sector. So we could address, the gap between the market needs and the skill sets that we are getting from the education and academia in terms of qualification, skills, knowledge, and so on. So, and also the issuance of considerable and sustainable investment to the sector through having to ensure that we have the sufficient funding and capitals in the market. If we just go to the next slide. It's a quick overview. Of course, we do more than this, to be very honest, but I just give a quick overview. What are the initiatives that we have worked, and what have been achieved, and what are on the pipeline. So we have, as I told you, we have issued the fintech framework and roadmap. We have also the fintech regulatory sandbox framework, which will enables fintech startups to test their solutions under the CBO supervision and oversights, and provide certain temporary regulatory exemptions for ready products, of course. We also completed recently our open banking strategy, which will enable us to roll out the open banking soon, to the market, maybe by next year end. Okay, and also we are in the process of drafting the regulatory framework for availing, the cloud services by the licensed institutions. We are working on the establishment of national electronic Know Your Customer. And also we are working on setting up the FinTech Innovation Hub to enable us to support the innovative ideas through incubation, acceleration program, which is part of the FinTech Innovation Hub. And also to support and attract the talents into the FinTech sector. We are working on upskilling these skills through our engagement with a number of educational and academia institutions through having specialized programs on these spaces and campaigns and training courses. And finally, continuous development of the national infrastructures and enhancements in terms of payments, in terms of different technologies, platforms for the country. This is very, very quick overview of what we are doing. Sorry, I think we have a limited time. So yes, I think by here I should stop. Yeah. So by here I should stop. So I think this is a very quick overview, and we are more than happy. Whoever would like to get more, we can get my contact details, and I'll be more than happy to exchange ideas and further concepts. Thank you very much.
Thanks a lot again, dear Mr. Faraz, for sharing the Central Bank of Oman's experience and the update which you shared already. And I think it's something which the market and the regulators can take over lots of things from there. Without wasting time, because we don't have enough time, I want to introduce our third that panelist for the first session, Ms. Pandetik Nelson. Currently, she's a BIS Innovation Hub, Hong Kong Center. She holds MBA degree from University of Chicago and University of Leuven. Numerous experience in digital transformation, such as Managing Director of SV Venture, leads a series of new ventures across digital banking, SME finance, and blockchain. And with this great experience, and I think I want to just make it short because it's, mashallah, it's lengthy, like CV, which will take longer time to cover, and I will give her this opportunity to just share her experience, and even the audience to get as much as that possible information and experience from her. Ms. Benedict, the floor is yours, please.
Great. Feel free to bring up the slides if you can.
Yes, I will.
Good. So given that we are running behind schedule, I'll try and make up for some time. So I'm Benedict Nolens, and I'm the head of the BIS Innovation Hub Hong Kong Center. So the BIS is the Bank for International Settlements, as you know. And we have in the last year set up the BIS Innovation Hub. And we have centers currently in Hong Kong, in Singapore, in Switzerland, in the Nordics, in the Bank of England. And we will be adding also a Euro Center, as well as a center in Canada. And the object of these centers is exactly in line with the prior presentations that were given to you, which is to bring innovation to central banking. And when you bring innovation to central banking, it tends to trickle down to banking and to the broader financial system. Next slide. So in sum, we focus on 6 core themes of innovation that we think are very pervasive and very important for central banking, including SupTech and RegTech, next generation financial market infrastructures, that includes payment systems, as Ms. Hendarta has presented, CBDC, as for central bank digital currency, open finance, which includes, for example, eKYC, as Firas just presented. We also focus now on green finance, which I think is very synergetic with Islamic finance. And then lastly, underpinning any digitized system has to be a very strong cybersecurity context. Next slide. So for this presentation, because for this session we're focused on payment, I will center the discussion around CBDC, Central Bank Digital Currency. This is one of the research maps of the BIS, and it shows the number of projects that are happening across the world in the CBDC space. And you can see it is very material. On this map, there is a distinction between retail CBDC projects and wholesale CBDC projects. So the retail CBDC projects are in the pinkish color and the wholesale are blue. So you can see they're less wholesale than retail CBDC projects. And that is not surprising. So retail CBDC is focused on making the fiat currency of a country digital in format so that it can interact with all the systems that Ms. Hendarta has presented. Whereas wholesale CBDC is typically focused on moving large amounts of money across economies. And it is no surprise, therefore, that most of the wholesale CBDC projects are taking place in hubs, such as Hong Kong, Singapore, and also, as you can see, the UAE. Next slide. Per the BIS research, the likelihood of CBDC issuance continues to increase. This slide is already a few months old, and meanwhile there has been a lot of developments already. But in terms of sentiment, the slide is important. So you can see that these, the color red and blue, both on a retail and on a wholesale, is growing, which means that the likelihood of us eventually achieving a live CBDC is actually growing. So next slide. So to focus just a moment on retail CBDC, so that is the central bank digital currency typically used in retail transactions within a country. The design of such CBDC tends to be very domestically related, and in some related to the domestic circumstances in that country. But broadly, there are 3 models. One is a direct CBDC, which would mean that individuals directly have accounts at the central bank. This model is unlikely to become the majority model. There are some cases in history where that existed, but for the large part of the last century, the intermediaries are actually acting as the intermediary with the end customer. That brings you to indirect CBDC or hybrid CBDC. The difference between these two models is that the hybrid CBDC is a liability on the central bank, even though it is distributed by the intermediary bank. Whereas an indirect CBDC becomes a liability on the distributor, even though it is also reflected on the accounts of the central bank. Next slide. As I mentioned, the motivations for issuing retail CBDC are highly national in nature. Nevertheless, as you can see here from this slide, specifically for emerging markets, there is a very, very clear trend that this is linked to financial inclusion. So often what is the case is that emerging markets are still seeing significantly increasing adoption of anything to do with mobile payments and digitization, as for example was clear in Ms. Hendarta's presentation. In those economies, if there is a lack of financial inclusion, and what we mean with that is if many individuals do not have access to a bank account for whatever reason, maybe due to lack of credit history, or due to lack of, for example, an efficient identity system, these economies are the ones that are trying to fast forward the CBDC journey for financial inclusion. Next slide. I will now turn for a bit to wholesale CBDC. So wholesale CBDC, as I had described, is to move large amounts of money across countries. And this activity is typically linked very much to the banking system, and it's typically linked to trade. So I wanted to present to you a project that we are handling out of the Innovation Hub Center in Hong Kong, so that you can get a feeling for the work we do. In sum, we don't just do research, and in fact, research is very secondary to our agenda as the BIS Innovation Hub. And instead, what we do is we prepare actual prototypes of systems. And depending on the prototype and the area of focus, the idea may be to move the prototype into production. So this specific project, which we call MCBDC Bridge, as for multiple CBDC bridge, is currently a project involving 4 central banks: the Bank of Thailand, the HKMA, the People's Bank of China Digital Currency Institute, the Central Bank of the UAE, and as well as banks and other market participants. The object of this journey is to develop a new multi-party, DLT-based, cross-border payment network that can reduce the cost and increase the speed of cross-border payment, bridging country financial exclusion. And I will come to this concept a little bit later. To achieve this goal, we engage in experimentation in agile fashion, and through collaboration and through modular approach, which we call Lego bricks approach. Next slide. So for the phase 2 achievements of this prototype build, we have built a prototype that enables the participating central banks to control the flow of their CBDC and to monitor transactions and balances in their issued CBDC with programmable levels of transaction privacy and aspects of automated compliance. The importance is that the prototype demonstrates a substantial increase in cross-border speed from days to seconds. The potential to reduce several of the core cost components of correspondent banking by up to half, and the benefits would be further increased for jurisdictions that do not benefit from a vibrant correspondent banking system. To just focus a slight bit on the other aspects of this slide, the top of the slide shows you a world map. And within the world map, you can see a decrease of active correspondent banks across the world. This is due to the fact that correspondent banking is actually quite an expensive model, because for every correspondent bank has a lot of operational duties that, if it doesn't perform them properly, exposes it to material fines. So there has been globally observed a retreat of correspondent banking. So as I said on the prior slide, what a new payments network like this would achieve is to enable countries that have weak correspondent banking systems, where the correspondent banking system is expensive and not sufficiently competitive, to become part of this network and therefore speed up and bring down the cost of their cross-border payments. The little circle you see on the slides, on this slide, is the decrease in the core cost categories of correspondent banking. We have elaborated on this also in the published report. We do think that there is a potential to decrease the core cost components by up to half. The bridge which you see is the correspondent banking model on the top, and the bridge, the crossroad bridge you see on the bottom, is an explanation of how the multi-CBDC bridge works, meaning it does not require the hop in the system via the correspondent banking network. It therefore, in sum, eliminates a step in the process through the presence of the central banks issuing and redeeming CBDC on the network. And this, in turn, this simplification allows for the speed being upped from days that the current correspondent banking system takes to seconds. Most transactions on the prototype are executed in less than 10 seconds, meaning that, for example, a 10 million payment can go from Hong Kong to the UAE in less than 10 seconds. And lastly, as I mentioned, and as I want to emphasize here as well, we continue building this prototype, and any central bank that would like to join this journey for learning or for becoming part of a future network like this is more than welcome to reach out to me. Next slide. So I want to finish with this slide. If you want to learn more about the BISIH, we have a very well-established website now where you can see all our projects. And again, please do feel free to reach out to us if you have any questions, or if you would like to learn more about a project, or even if you would like to become a member in a project such as the Enbridge project that I described. So that's it, and I think we've made up on time with this, so I hope this worked out for all of us. Thank you.
Thank you very much, Ms. Pandadek, again for your informative session, which I believe it's something like unique from the other central banks' experience, and we hope, inshallah, we will meet shortly. And I think we don't have enough time even for Q&A. Just thanking you all for being here again, and thanks for our panelists. And it was my great honor to be here with you as a moderator, and wishing you all the best. And thank you very much. And I think the floor is open for the second session. Thank you very much. Assalamu alaikum.
Thank you.
Thank you very much, Mr. Suhail, for moderating our first session, and thank you kindly to our guest speakers. Ladies and gentlemen, let's give them a round of applause. Moving on to our second session, we will dive more into the financial market and industry views, assessment, and Sharia thoughts on digital transformation on the Islamic business and economic transactions. Please join me in welcoming our moderator, Mr. Iman Shah, Deputy Commissioner of Indonesian Financial Service Authority. Mr. Iman Shah, the time is yours.
Assalamualaikum warahmatullahi wabarakatuh. Good afternoon for all from here, Jakarta. And I think it's a great pleasure as well for OJK to join, and I myself will be acting as moderator for the second session. So I think as the MC mentions before that, I think we're going to have a further discussion with regard to the financial market. And I think we're really addressing as well the issue on digitalization in the financial market. So we do hope that we're going to have a very insightful discussions this afternoon with our prominent speakers. So allow me to introduce our speakers this afternoon. So I think first I would like to introduce the first of our speakers, Mr. Lilian Lafia. Hopefully I really there's no mistakes with pronunciation to your name as well. So
my name, so it's not an
thank
issue.
you.
Used to it.
Okay, thank you. Thank you. So Mr. Lilian is currently Executive Manager, the Head of Treasury and Capital Markets of Kuwait Finance House of Bahrain. And I think he has spent already more than 20 years experience of corporate and investment banking. He is a member of the executive management team of Kuwait Finance House in Bahrain, heading wholesale banking activities, including treasury, capital market, financial institution, and corporate banking. He has also served on the board of the LMH, 100 subsidiary of the Kuwait Finance House, incorporated in Kuwait, and whose mission was to particularly focus on the primary and secondary sukuk market of KFH group. I think before he joined the KFH in 2006, he spent 9 years with the BNP Paribas, holding various positions in Europe as well as in Middle East. So he ended his duty at BNP as head of investment products for the Middle East region. Dealing extensively in equity, bonds, and also structured products. Okay, we're going to have a very insightful view from Mr. Lilian later on. So I think with his background, we're going to have that particular ideas with him. So the section of our panelists, hopefully I saw
our apology for the inconvenience. I think the connection of Mr. Imansyah is not good, but the show must go on. I think we have to start our session 2 for this seminar. So let's go with the first speaker, with Ms. Lilian. I think this session is free flow discussion. We can exchange the views of the market players, Sharia scholar, and economists about the implication of the digital era on the Islamic finance industry. So first we go to Mr. Lilian. So we want to know more about the impact of the digitalization in the Islamic banking industry. And as you are the practitioner in KFH, we also want to know more about how the digitalization impacts the operations of the Islamic banks, or is there any risk emanating from digitalization in your banking, or what do you think about the view overall of the industry players about this? So, Mr. Lilian, without further ado, the floor is yours. Thank you.
Thank you very much. Thank you very much. It's a pleasure to be here. Thank you to the organizer. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum to everyone. Good morning, good afternoon, good evening, whether and wherever you are. On the digitalization and impact on the banking system and the banking and Islamic banking entities, the first thing I want to say is that to be able to be successful in your digital strategy as a bank, you need to have the proper environment, and that's extremely important. And I've seen in session one we have highlighted this in different countries' initiative. I want to highlight here that Bahrain as a country has been at the forefront of developing the fintech and the appropriate digital environment for companies and banks to flourish in this new era of banking. The sandbox of initiative of the Central Bank of Bahrain was one of the first in the world. It's Bahrain being a small market. It was relatively easier than in larger markets with a bigger player and a bigger population to put things in place. But nevertheless, they did the right thing at the right time, pushing all the banks towards, for example, something which sometimes is a bit of controversy for banks because bankers usually try to keep their market share, but really pushing hard on the open banking initiative, pushing hard on benefit pay, which allow you to pay and kind of electronic wallets, allowing you to pay across the kingdom with different means of payments, including recently last week the e-check, which is also linked to the benefits, which is again the electronic wallet. So all these initiatives have allowed us to really be at the forefront as a country in terms of digital banking, and as a result, I think we have seen this in the whole world. Is the pandemic has been a fantastic catalyst to all this. It's like if, subhanallah, the pandemic just came to accelerate what was started already, and that and we have seen in Bahrain it's not even double digits, it's plus 50, plus 60% of online payments over the last 12 months, and that's across the globe. I came across a statistic, I think, of e-commerce, for example, going up 58 or 60% in the Middle East. And it's not something specific to the Middle East, it's obviously something we see everywhere. So the pandemic plus the technology plus having the right environment pushed the banks and accelerated a lot our e-banking services. Now, when it comes to we are in a conference which is co-hosted or co-organized by IFSB, so we need to put the focus on Islamic entities. And when it comes to Islamic banks, KFH is one of the leaders of Islamic banking. But again, we are not really different than conventional banks. And I think if at all, it's a better thing for us this new era of digital banking than even for our conventional peer. I take one example, for example, which is that we have a product called Tamwili, which is personal finance based on commodity murabaha. In the previous, in the old days of pre-digitalization, to do a commodity murabaha as a customer, you had a lot of paperwork, a lot of things to sign in terms of the acceptance of the community, sending back the community, and all this. And it was sometimes, honestly, especially for, I call them agnostic customers who are not, who sometimes bank with conventional and Islamic banks. It was sometimes for them very difficult to understand, and sometimes it was just a deal breaker for them to be our customer. And now with the new era, the platform we're having, the community murabaha is done extremely quickly, very simply. The acceptance and the purchase of the community is done electronically through SMS or through an app directly. and that makes us streamline our processes very much. Starting from the beginning, the initiation of the deal till the actual money being transferred to the customer account. That's one of the examples. A second example, and what we have done at KFH is trying really to have the experience of the customer, and when it comes to digital experience from the very beginning, i.e. the initial point, which is just doing onboarding online, which again has been allowed by the Central Bank of Bahrain, among one of the first country in the GCC and in the world. So that was extremely useful, especially again during the pandemic days. And it comes from, to me, the digital banking is a very fast moving environment. So you need to be very agile. So again, one thing which have been in a way for Islamic banks, one thing which have been one of our weakness in the past was the size of the Islamic banks. Could be now a strength actually in this digital environment, because number one, we are smaller, so we can move quicker. Sometimes, not always the case, but sometimes. And number two is we can also get access to new markets, whereas before the barrier entries to new market were a bit difficult. Now it's easier. You can bank online. We have an online banking application called Jazil, which is, again, as I already mentioned, allowing you to do online boarding and doing all the normal regular transfer and payments internationally or locally, but also now you can apply for facility through this Jazil application and follow up all the steps of your application. That was just not possible before, and we can do this online and try to offer it to new markets and new customers. I'm not gonna. I mean, I think it would be much better if we have more interaction. It's a bit more difficult without a moderator. I don't know if he's back or not, but maybe I just stop here for the time being and leave the floor to someone else to pick it up. Is there anybody who I just ask you, Mohammed? Maybe you want to? Yeah. Hello.
Hello, Lilian. Hope you can hear me now. Sorry for the really bad these communications from my side here in Jakarta, because it's raining hard now in Jakarta. So I think to some extent it does affect the quality of the communications. So hopefully that you hear me now. Just to make sure that
you seem breaking up a little bit, if I may say. It's not completely clear.
Yes. Yeah. Sorry, Lilian. Hopefully that you can hear me right now. So then
we are losing you again. I don't know if you can hear me, but I think we are just losing you again. My fellow panelists, I think we need to take the lead now.
Okay.
And be moderate ourselves.
But it's not really clear. Okay. So hopefully committee. Yeah. Sorry for that.
Okay.
Anybody from the committee can assist me for facilitating the session, please.
Okay.
So I just off my video because I think so I just off my video. Then we can proceed with the session. Is it possible for the panelists, for the other panelists as well? Sorry.
If you, I mean, for the sake of time, if you want, listen. I mean, if for the sake of time,
the committee, please assist me, please.
If you allow me, I don't mind to be a panelist and a moderator and take over. And then
Thank you. Thank you, Lilian. You are very welcome.
It's fine. Don't worry. Okay, I think we should have started rather than starting with me. We should have started with having an overview of the market industry. And maybe with you, Mohammed. Mohammed is a well-known speaker. I think he's almost spending more time on webinar than in his office almost. So Mohammed from Moody's will explain to us a little bit what's the impact of the digital transformation for the Islamic finance as a whole, as an industry, and how do you suggest Islamic finance players would like to mitigate and conditions and disruption in the financial technology. How do you see it from your perspective as an analyst, as a senior analyst looking at the industry as a whole?
Thank you very much, Lillian. And if anything, it shows that we're really live. Just for a small correction, I'm with S&P Global Rating. Right. So again, thanks for you and for the IFSB for inviting me to participate to this important event. I will try to cover the impact of digital disruption on both the banks and the financial markets. As far as the banks are concerned, I think there are some activities that are unlikely to be significantly disrupted in the next couple of years. But there are some activities that will be significantly disrupted. Now, when it comes to banks in core Islamic finance countries, in our view, they remain somewhat protected by their regulators, whether in the GCC or in Malaysia. I think in the GCC, the regulators know that the banks are the only avenue available for the financing of the economy, and that because of the low development of the local capital markets, they cannot afford to have too much disruption to the banking system. And that's why they're trying to strike the right balance between protecting the banks on the one hand, and also offering a fertile environment for the fintech to thrive through the different sandboxes and the different accelerators that we've seen flourishing around the region. And there are few low-hanging fruits here, primarily in the payment and money transfer businesses. But if you look at the clients themselves, if you speak to a corporate in the GCC or even a retail client, they are not yet ready to switch from a model where you have an interaction with a human being and where you receive some advice from your banking advisor to a model where you interact only with machine. But disruption is coming, don't get me wrong, and disruption is coming, and it's going to be primarily in the financial market and in the Islamic capital market. And here I would start with what will cause the least disruption and finish by the real disruptors as we see them. Now, what will cause the least disruption, in my view, is the cryptocurrencies. I think cryptocurrencies have been there for almost 13 years now, since the publishing of the 3,400 words white paper on Bitcoin. And today, if you look at the market cap of the cryptocurrencies, it's around $2.6 billion. But in our view, these remain speculative instruments. Although we have observed recently more and more interest from the retail and institutional investors, but they remain primarily speculative instrument. And this is not their only flaw. The other one is the fact that they consume a lot of energy. For example, if you look at the Bitcoin network, it is estimated that it consumes as much electricity as the United Arab Emirates, the whole country. And here the supporters of the cryptocurrencies argue that there's a lot of renewable energy that goes into the mix. But I mean, the model remains really with high energy consumption, and this is because of the validation model, which is the proof of stake versus the proof of work that is being used by the network of Bitcoin. In terms of impact on the banks, I think the impact is fairly limited and could take the form either from exposure to the risk of product mis-selling for those banks that are marketing some ETFs or some other products based on Bitcoin or cryptocurrencies, or the fact that some customers might use their credit card limits or their loans, the consumption loans, to buy crypto. But crypto aside, I think the real disruptor here is the blockchain technology and its different use case. For example, in the digital sukuk or the digital bonds. And the facilitator here would be the central bank digital currency. Now, let me be more specific. So on the blockchain, I think if you look at the technology and look at the sukuk market, the technology can help resolve three main problems that the sukuk industry faces today. The first one is the traceability of the underlying assets. And that's not only relevant for the risk profile of the transaction, but it's also relevant for the application of Sharia standards. Think of Standard 59, for example, and the necessity to maintain a tangibility ratio of above 51%. Blockchain will give you a real-time view of all the underlying assets. If one is destroyed, if one is disappearing, if one has prepaid, you would have this information real time. Second problem that blockchain resolves for Sukuk is the traceability of cash flow. And this is relevant for those transactions, like the Wakala transaction, where the repayment is underpinned by the performance of the underlying assets themselves. And here, instead of being in a situation where literally 3 days before the payment of the periodic distribution, you have one gentleman or a lady looking at the big Excel file and checking which asset paid what, you would have a real-time view of the transaction and how much each asset has paid or has not paid. And that could prompt a prompt corrective action. If an asset is not performing up to the expectation, you will have a block that is missing in the chain, and you can implement prompt corrective action immediately. The third challenge that blockchain could resolve for the Sukuk market is the traceability of the investors. And here again, think of the way the Sukuk industry is managed today. Sometimes the issuer would have to go back to the investors to ask them for their consent to make changes to the legal documents or to take a certain decision, like, for example, the acceleration of the Sukuk. And the way it happens today is this is advertised in the equivalent of the FT or through email or through phone calls. So it's totally inefficient. With blockchain, you would have real-time view on who is holding what. And through smart contract protocol, you can send the information in the blockchain and get the decision and get the resolution if it's coded in the smart contract protocol, get it implemented immediately. So that would change really the way the Sukuk industry work. Now, onto the digital Sukuk and the digital bonds. We've seen a dozen of transactions over the past 4 years with a total amount of less than $1 billion. And there were no real digital Sukuk except Blossom Finance that uses Ethereum. But there will be more. There will be more because intermediaries are developing the offer. We've seen some of them being associated with the banks, some of them being independent, like a company that was created in the DIFC FinTech Hive. And the idea is simple here. Cut all the intermediaries, use a platform to issue Sukuk from A to Z. Say, for example, a large group wants to raise a 500 million Sukuk. They just log into a platform, select the legal documents to be used, which would have been standardized already. So it would resolve the problem of standardization that the Islamic finance industry faces. Start the process of book building. Investors would receive an alert. Hey guys, this company XYZ is issuing a Sukuk for a total amount of 500 million. Then the book building will start. And once the total amount required is reached, the bond or the Sukuk is created. The settlement happened using the platform. And that could really be create a revolution in the Sukuk market in a sense that it would open the market to small issuers and small investors. It would make trading available 24/7. And if you push it to the extreme, you can apply it to anything through tokenization. Now, say instead of issuing Sukuk, you want to sell a house of $1 million, you know that if you go and try to market it on the market, you would probably be speaking to few people. But if you sell it in the form of 1,000 tokens with $1,000 each, you might be speaking to a much wider investor base. Obviously, there are some prerequisites to get to that point in time, such as the necessity of having a proper regulatory framework that recognizes, among other, the smart contract, the necessity of having a technology that is fully ready, the necessity of having a custodian of the token that would be a central authority and that would be trustworthy enough in order to be able to hold the token for the benefit of the token owners. And more importantly, you need something to go from the real world to the virtual world. And this is where the CBDC or central bank digital currency comes into play. Now, the role has been so far fulfilled by stable coins, but these might not be as stable as their name suggests. And here is where the CBDC is different because it comes with a day one legitimacy and day one stability. And I think in the previous panel, we heard about the the different model of CBDCs, and I will finish with that. There are three models. One disintermediated model where the central bank would authorize users to open accounts that it would manage directly. So in this case, the banks will disappear or their activity will be profoundly impacted. There is an intermediated model where the banks and other financial intermediaries would open and manage these accounts and do all the customer-facing services, including the KYC and AML checking. And there's a hybrid model where the accounts would be opened by the central bank, but managed by the banks and the other financial institutions. And here, in our view, we think that the central bankers are rational people and they would lean toward the intermediated or the hybrid model in order to preserve the financial stability. And the most recent experience that we saw, and it was actually published yesterday, is the Central Bank of Nigeria with the e-Naira project. Thank you very much, and back to you, Lilian.
Thank you, Mohammed, of S&P, not Moody's. I was a bit confused, actually. I saw Moody's on one of the notes, and I said, what happened overnight? He changed or something? So I just read what I saw. Sorry for that. Dr. Sami, thank you for being patient and being with us today. I just wanted to get from your perspective as a senior member and senior staff of the IDB, could you give us the IDB perspective on this transformation and revolution that we are going through in terms of digital banking, and how do you see it will help to maintain maybe the stability of Islamic finance? And something more that we have heard a lot, and that should be, I'm sure, one of the core objective of IDB and of its members, country members, is how to develop sustainable finance and to give access to banking to the large majority of the population, of the Muslim population. Please, Dr. Sami, the floor is yours.
Thank you, Lilian, and thanks to the IFSB and to my colleagues for these insightful and helpful comments and discussions. Let me highlight in the beginning that this digitalization revolution is not only for banks, it's for banks and other parts of the economy, particularly other parts of the financial system, including, for example, insurance and risk mitigation mechanisms. And this will bring me to the first part of the comments I would like to highlight, which is risk sharing. You know, the essence of risk mitigation is the distribution of risk rather than concentrating risk. Concentrated risk raises the systemic risk, as regulators have learned very well after 2008, and this would make the system as a whole vulnerable to shocks and crises. So to make the system resilient and stable, we have to decentralize risk, obviously in proportion to equity, so that risk is never concentrated in one place. Whenever that place collapses, the whole system collapses. Now, the blockchain technology is the most common technology today for decentralization. Actually, the general theme of the technology is decentralized digital system. So it makes a perfect sense that blockchain can be used to decentralize risk. And that's why insurance is one of the most growing areas in the financial system using the blockchain. I think this is a very promising area because it makes a perfect sense that decentralizing risk would work through particularly cooperative insurance, which shows why Islamic insurance is the most logical and the most sustainable way of managing and mitigating risk. We envision in the future that rather than asking for a letter of guarantee to protect a particular business transaction, there will be, people will be asking for a certified decentralized risk mitigation system through blockchain technology. And this would ensure and would be, as Brother Muhammad highlighted, which would be fully transparent. You can see all those who are sharing the risk and what are their, so to speak, risk appetite. And therefore, you can real-time assess whether the system is actually stable or whether the system is becoming more and more risky and whether risk is concentrated in some areas or not. Obviously, we have to complement the blockchain technology or the network with the Internet of Things, with smart contracts, in order to monitor the flow, so to speak, of risk across the members of the network, and therefore ensure a certain level of resilience. If we move to the next point of how we can apply this digital technology to capital markets, Brother Mohammed also highlighted using digital sukuk, or maybe we can call it tokenized sukuk or crypto sukuk. We already know that there are more than one jurisdiction in which they have retail sukuk. So the natural evolution of retail sukuk is simply crypto or tokenized sukuk, because through the crypto technology, we can approach and access a wider audience in a very efficient manner of transfer. And in my opinion, it doesn't require central bank digital currency, because just like you can trade any tokenized assets using dollars, you can trade tokenized sukuk using dollars or using any other currency. So the central bank digital currency might be helpful, but it is not necessary to move into the next phase of the sukuk development, which is crypto sukuk. We think this would be, and on top of that, because the blockchain technology using smart contract is very transparent and verifiable, the regulatory guidelines and standards of the capital market can be easily implemented and monitored real time again. So the probably resource mobilization and capital market instance will be more or better monitored using the blockchain technology than the standard way of doing it. As we all know, if you have a centralized monitoring system of capital markets, then I'm sure you have read the stories of the SEC rule number 4 or something, where banks were able to meet with regulators and therefore influence in one way or another the implementation of these rules. Now, with a decentralized blockchain technology, these risks might still be there, but it will be much, much less dangerous to the system. If we move on, we can think of digital vouchers, or what we might call social cryptocurrency. Vouchers have been in place for decades, and governments used to have food coupons and other or similar techniques to support financial inclusion and to support the disadvantaged group in the economy. We can easily envision having this system upgraded through a blockchain network that will enhance financial inclusion and therefore support redistribution of the wealth across the system. And we all know that there are serious issues about wealth concentration right now. So we think these digital vouchers could be very helpful in the redistribution mechanism in the economy, and this could be complemented with other non-profit institutions like Zakah and Waqf and similar institutions. Moreover, these digital vouchers can serve as a local currency or complementary currency to support the formal currency of the system, of the official payment system. I think there are the central bank digital currencies are very promising, but since it's the official payment system, it must be under strict regulation. I don't think we can address issues of inclusion directly through the central bank digital currency. The priority for central banks are stability of the system. Inclusion is another objective. It's a very important objective, but it cannot have priority over the stability of the payment system. So through the digital vouchers, we can work out solutions to the financial inclusion without affecting the formal currency in the system, whether it is digital or not. Regardless, digital vouchers will complement the system, whatever the case may be. Finally, as Brother Muhammad highlighted, there is a serious problem in blockchain technologies when it comes to consensus algorithms, whereby like Bitcoin is consuming energy equivalent to countries. And if you compare this consumption of energy on one side with how many transactions actually adding value to the economy, you can see a huge mismatch. There is a huge gap between the liability and the asset side, or the benefit and the costs. There are huge costs to the economy using these algorithms or these networks. But on the other hand, the benefits, how much trade is facilitated using these, and that's why they are not really currencies, by the way. These are speculative assets. So my colleagues at the Institute, they worked hard to develop an alternative consensus algorithm that is sustainable and doesn't consume that much of energy. And in that algorithm, which we call proof of use, miners and users are the same group. Just think of it just like in insurance, you have the insured and the insurers are the same group, right? If you split the two groups, if you have commercial, say, shareholders, one group separate from the insured groups, you will have conflict of interest, and then you will have this tendency to taking risk or taking too much risk. Same thing, if you split miners from users, then there is a tendency of the system that there will be too many users competing, and this will add up the cost, make the game very risky, and obviously not sustainable. By harmonizing, by building the system on reciprocity, users and miners are effectively the same group. So in this manner, the network would grow as its transactions grow, and therefore as its value would grow. So in principle, at least, benefits or costs are in harmony, and therefore we expect them to develop further and further. There are many opportunities we envision for the digital system, and I think this is a very important opportunity for us here to explore these opportunities and to encourage researchers and regulators to talk together and try to find ways to make these actually come true. Thank you very much.
Thank you, Dr. Sami. Thank you for your insight from EOT perspective. Dr. Bashir, just turn your camera off. I hope you're with us. Are you back with us? Yes, you are. Assalamu alaikum, Bashir.
Sorry, thank you very much.
No problem.
Sorry, I missed the question.
No, there was no question yet. I was just making sure that you were with us. So now you are with us. Now ask the question.
I'm with you. Thank you, Lilian. Thank you.
Glad to see you. I start hating this screens things. I would prefer to shake your hand, but we have to continue at least for a few months. Hopefully one day we'll be able to meet all of us physically, and that will avoid the technology issues we are facing. Sheikh, I really will be very interested to hear your view as usual, and specifically on this topic, because whenever we speak about digitalization of banking, you hear things like intangible, and you hear many words which are in contradiction with some of the Sharia principles in banking, which requires tangible assets, which Dr. Sami just now mentioned. I don't know if it was on purpose, but he mentioned that cryptocurrencies are somehow speculative assets, and if you follow the price of the Bitcoin over the last and the volatility, I'm quite tempted to be in agreement with this. So can you share with us and with all the participants and the audience your view from a Sharia perspective on the challenges of the digital banking? What are the main topics, the main things which are in your plate as a Sharia scholar of the IFSB when it comes to digital banking and the possible drawback in terms of Sharia compliance?
Okay, Bismillah, Alhamdulillah, wa salatu wa salamu ala Rasulillah wa ala alihi wa sahbihi wa man wala. Thank you, Lillian, and I wish to thank the IFSB for inviting me and giving me the chance to participate in this conference, and it is really an honor. This is a very topical issue because this is what we are witnessing in the world today, especially with the disruption caused by the pandemic and the growth of digital systems and digital alternatives to earlier ways of commercial transactions and also communications. Definitely it is bound to bring challenges from the Sharia perspective because of the disruption that the digital system do cause to the ways of making business, the way of concluding contracts. And this is, from a Sharia perspective, definitely things have to be studied from multifaceted dimensions. The fundamental intent of the Sharia is to bring benefit and maximize it and remove harm and minimize it. And specifically regarding wealth is to create wealth, to protect wealth, and to ensure judicious utilization of wealth, and also to achieve wealth redistribution. Now, within this framework, any innovations that come in the financial markets or in the way of doing business, we have to see them within this context. Definitely, digitalization has facilitated a lot in the ease of doing business, in reaching to markets, in reaching to vulnerable communities, especially in terms of the effectiveness of social finance instruments. But then it has also caused lots of disruption by wiping out certain businesses, and this has an effect on the economy. Even though whenever you have digital introduction, any digital introduction, you have potential, you have forecasts that are forecasting growth in GDP to a certain percentage. Just 2-3 days ago here in Nigeria, we had the introduction of a central bank digital currency. And the forecast was that it was going to increase the GDP by a certain percentage. This definitely, if it is achievable, it is a benefit. And the Sharia does not frown on anything that will bring benefit to the community, to the society. But then also the negative impacts have to be looked upon. And also the essence of the impact of these digital transformations on Sharia contracts, that one is quite important. We know that the OIC Fiqh Academy have delayed taking a decision regarding smart contracts because of the position of cryptocurrencies. Just now, my brother, Dr. Sami Suwailim, is highlighting the speculative nature of cryptocurrency. Are we going to continue? Are we going to regard them as currencies, or are we going to regard them as speculative instruments? Now, we see in the history of finance in Islam, in the Sharia, we see that means they are always given the rules of the goals that they achieve. Imam Malik used to say that if people decide to use a cattle skin as currency, I would regard that doing riba in them is not permissible. So these are the kind of things which we need to learn from the way the ulama they view the Sharia scholars of the past. They view innovations in the financial sector. So in my opinion, the digital transformations are a necessity. And there is no way that we can stop the train moving. And they do facilitate. It is just as the Economist magazine are made the comparison between going to work in your car or going to work in the train. When you have functional train rail systems, definitely they are more efficient and they achieve more than if each and every person is having his own individual means of transport. So this is if we contextualize digital system within this context, and then we superimpose them on the requirements of the Sharia. If it is in the area of currencies, what are the things that are needed for currencies? They have to be a store of value. They have to have. There has to be confidence. They have to be they have to be freely exchangeable. And they have to be determinants of price and not themselves to be determined by speculation. And also when we come to contracts, the element of consent, the element of lack of coercion, the element of giving an option to go ahead with the contract or not to go ahead with it, even if it is concluded. All these, they all can be integrated in digital system and in smart contracts. So I think the only thing we have to guard against is the negative disruptive impact of digital transformations on the general economy, whereby people are wiped out from jobs without having any genuine alternative. And this is where the intervention of government comes. Markets are supposed to be as free as possible, so long as the freedom and the free hand that they have does not lead to bringing harm to the general society. These are my perceptions, and but as you know, there are yet to be clear-cut judgments on many issues that are regarding to the validity of certain digital innovations that have come to live with us. So, but Alhamdulillah, the good thing is that this is an ongoing process by Sharia scholars in conjunction with experts, so that the experts are able to explore and to present what the digital innovation involves, and then the benefits and the harm will be weighed to see which one outweighs the other. And based on that, a position will be taken. Thank you very much.
Thank you, Barakallahu Fik, Sheikh, for your insight again. That was very useful. What I think the audience and all of us we take is that we definitely need the wisdom of the shuyukh in this rapid transformation. You describe it rightly as something that we cannot really avoid. It's coming, and it's coming, and it's going to transform. It already started transforming our industry from the sukuk, like mentioned by Mohammed, and also the digital vouchers and all the digital transformation that EOT is studying. We have only 4 or 5 minutes to go before the end of the session. I do not see any Q&A. I don't know if in the audience you have any question. You can post them on the Q&A chat box. So meanwhile, just maybe a few words of conclusion. Brother Mohammed, you are the first one to talk, so we'll give you the opportunity to conclude also as a first speaker. If you can give us some, now that you heard the other panelists, maybe you can share some of your view in a couple of minutes and conclusion on this topic of digital transformation.
Absolutely. Thanks, Lilian. Maybe before sharing my concluding remarks, just a point on the necessity of having or not a CBDC in order to allow for the development of the digital sukuk, digital bonds, and also tokenization. The reason why I think it is a necessity, it's because this role today has been fulfilled by stable coins. And stable coins, they may be, or they may not be as stable as their name suggests. I think we've seen some episodes where the the quality of the reserves of stable coins was called into question. And this is why when you have a CBDC, you come with day one stability and day one acceptability. The other point I wanted to make is inclusion versus stability that was raised by Dr. Sami. I think they are not mutually exclusive, and the central bank, by launching a central bank digital currency, not only they're pursuing the objective of stability, but also they're pursuing the objective of inclusiveness. Because today, when you remove cash completely, you can have the opportunity to drag the part of the gray economy that is there and that is using cash. You can have the possibility of dragging it to the lights. Now, in terms of conclusion, I think the key intermediaries disrupt, or you will get disrupted. In this part of the world, we have we live in a region where the banking system remains protected, but there are many other financial services that could be disrupted and that will be disrupted in the near future.
Thank you, Brother Mohammed. Dr. Sami, do you have any concluding remarks you would like to do before we ask also the same to Dr. Bashir? I think you're on mute, Dr. Sami. Just unmute yourself.
Okay, can you hear me now?
Yes.
Good. I agree with Brother Muhammad that financial inclusion and digital currency are not completely mutually exclusive. That's true. But they are not matched, right? So you have an overlap. We have two circles, one financial inclusion, one stability. There is an overlap, but there are areas that are not common. So that's why I think while central bank digital currency is important and vital for the digital transformation of the economy, it is not primarily, it's not the primary financial inclusion strategy. From Sharia point of view, we know that the rules regarding gold and silver on one hand, but these are different from the instructions regarding zakah and waqf and fard hasan, which are intended for financial inclusion and wealth distribution. These are two different domains. They complement each other. They overlap in some areas, but they are not conceptually identical. So from this perspective, I think we have to be very careful. I don't think central banks can at the same time work to help the poor and redistribute wealth. No, that is not the primary function of the central bank. Thank you very much.
Thank you, Dr. Sami. You are well heard. Dr. Bashir, the concluding remark from Sharia perspective, where do we go? Tell us, you have to guide us.
Okay, Lillian. I think it is worth remembering that under the Sharia, in the area of transactions, especially commercial transactions, everything is permissible except if it is, if a prohibition has prohibited it. This opens the arena quite wide for us. And it is by the mercy of Allah that what He has prohibited for us has been clearly outlined and delineated. But what He has permitted, it is limitless. So if we approach these digital innovations and also the transformations that come along with them, with this spirit, I think we are going to will be able to achieve the benefits that come along with this with these transformations and avoid the harm that may come along with them. This is just my concluding remark. Thank you.
That's a fantastic conclusion and very kind of optimistic view and very open-minded. So that's very good. And I take back also the words of Mohammed, who said, I mean, you have to disrupt if you don't want to be disrupted. And with the help of our Sharia scholars, hopefully, inshallah, we'll not do anything wrong and we'll continue the journey of Islamic banking despite the fast-moving environment. I personally believe, really, as I said at the beginning, although it was a bit humpy at the beginning, this session, but as I said, I strongly believe that it's an opportunity for Islamic banking rather than anything else if we do the right thing at the right time. We are relatively small as entities, even large Islamic banks are very small in terms of scale compared to the big giant of the global finance, and that could be actually in this world could be a chance so that we can be more agile and moving fast and make our processes more streamlined and in that sense allowing us to access more customers in more geographies. I will just conclude on this, and you wanted to say something, Dr. Bashir. I saw your hand raising. No, it was a salam only. Can't hear you. You're on mute. I don't know if you want to say something. No. Okay. Okay. I don't know if the organizer wants to take back the mic. I've seen our moderator is back online. I'm not sure if you want to say something before we end the session. Is there anyone? I think we are finishing our session like we started it.
Round of applause. Round of applause.
I don't mind to moderate the next session, but I have other things to do also. So. Okay, I'm not sure. I mean, it's time to.
Thank you, Mr. Lilian, for keeping the session going. A little technical glitch won't stop us from having a very fruitful discussion to conclude this afternoon. And we thank you kindly to Mr. Imansyah and all our distinguished speakers in the second session. Ladies and gentlemen, let's give them a round of applause. And now we have finally reached the end of our event, the IFSB conference, with the topic of financial stability in the digital era and its implication for Islamic economics and finance. Thank you very much for sharing your time today with us. Hopefully it was an insightful and informative session for all of you, as it was for all of us here at the studio. Allow me, Nadira Titalia, on behalf of ISEF 2021 committee to sign off, and we look forward to see you again on another ISEF event. Wassalamualaikum warahmatullahi wabarakatuh.